Before we start today's stream, I'd like to take a moment to actually discuss, what the way we try to study over here. So you'll see that I've prepared this actual structure that I follow to study. So right now, the past two live streams, what we have been doing is we have been we are at this stage, which is the first time reading. So, in the first time reading, I go through the entire study material along with all the examples, and if there are any illustrations, then also those illustrations. And I read that uninterrupted. I do not focus much on what I'm not understanding or what I, have doubts or confusions on. My main goal is to complete the whole chapter, read the whole chapter first day, so that there's a mind mapping, uh, you know yeah, a mind mapping can be done about the entire chapter. Some easy parts I'll obviously understand it in while reading it for the first time, and for all the complex and difficult parts, I'm going to focus on them later. So once I'm done with the first time reading of any chapter, the next thing I do is I go into this stage, which is I start making notes. I start underlining the important stuff in the study material. And I also start focusing on what I did not understand while reading it for the first time. So, for something, taking help to understand something that I did not understand on the first time, I use AI tools like Claude or ChatGPT. Now, the third session is what we call a doubt clearing session. This totally depends on, you know, I may do it sometimes separately, I sometimes do it while reading it for the second time. So, the second time is kind of like the first revision that we do for this chapter. And it's also the time where we make notes and where we make sure that we understand, we start to get conceptual clarity of the chapter. And then, after doing that, we start solving the question answers given in the study material. And also, if I can find any other question answers from the internet, I try to solve those also. And after we have done all of these, then we can review and see whatever mistakes we have made while solving those question answers. And also, whatever concepts that are still not unclear or unsure of, we finally review those and we try to obtain 100% conceptual clarity regarding all the topics in that chapter. So this is the way or structure that I follow for studying. So if you are, you know, thinking that what am I doing just continuously reading this, so because this the first time I'm reading this chapter, not first time I'm actually reading this chapter. I've studied this in intermediate also, but for preparation of my final examinations, this is the first time I'm reading this chapter. Now, also keep in mind is that when I'm doing revisions, when I'm doing doubt clearings, the title of the videos or the live streams will mention so. There may be sometimes I may not do a live stream, I may do a video and upload it. This can be used, by the way, for anyone who looks into, because there's several revision videos on YouTube for every single chapter in the CA final course. But you'll never find a video, or rarely find a video, I would say, that reads you this study material. So you can also consider this as like a audiobook. So that's why I took some time to explain, what I'm trying to do over here. So we'll begin with our speed run. So last day did we studied two times, 46 minutes on the first session and 32 minutes on the second session. In total, we studied 1.3 hours. So not really a lot, but I was also busy with work yesterday. So we'll try to do better today. All right. So this is showing right. So now, yeah. So let's start the timer right now. Let's jump in. I think I left off at page number 57. Yeah. So, activities or transactions to be treated as supply of goods or supply of services. Section 71A classifies certain activities or transactions constituting supply either as supply of goods or supply of services. Schedule 2 of the CGST Act contains the list of activities or transactions which have been classified either as supply of goods or supply of services. This helps in mitigating the ambiguities which existed in earlier laws. Example 33. Under earlier tax regime, the restaurants used to charge both service tax and VAT on the value of food served. This is so because both sale of goods and provision of service were involved and therefore taxable even under both the statutes, irrespective of VAT law and service tax law, got triggered. Under GST, the supply by a restaurant is treated as composite supply since supply of food and service is naturally bundled in ordinary course of business. Further, para 6b of schedule 2 specifically provides that such composite supply shall be treated as supply of service. Hence the entire value of invoice shall be treated as value of service and leviable to GST accordingly. The matters listed down in Schedule 2 are primarily those which had been entangled in litigation in the earlier regime owing to their complex nature and susceptibility to double taxation. These are as follows. Para 1. Activity or transaction, transfer. Type, any transfer of title in goods, nature of supply, supply of goods. Any transfer of right in goods or undivided share in goods without transfer of title thereof is considered a supply of services. Any transfer of title, in example, Genius Equipments Limited gives the machinery to rent on Suhasi manufacturers. Any transfer of title in goods under an agreement which stipulates the property in goods shall pass at a future date upon payment of full consideration as agreed. This is called a supply of goods. Dhruva Capital supplied goods to on hire purchase basis to customers. This is also a supply of goods. Optima manufacturers supply toys to retailers on sale or return basis. This is also supply of goods. So when you transfer the title in goods, it's under an agreement. It's supply of goods. When you transfer the right in goods or undivided share in goods without transfer of title, this is a supply of services. Land and building. Any lease, tenancy, easement, license to occupy land is considered a supply of services. Any lease or letting out of building, including a commercial, industrial, or residential complex for business or commerce, is also considered a supply of services. Okay. Any lease or renting out of building, including a commercial, industrial, residential complex for business or commerce, is a supply of services. Treatment or process. Any treatment or process which is applied to another person's good, that is a job work, is supply of services. Any transfer of business assets where the goods forming part of business assets are transferred or disposed of by or under directions of persons carrying on the business so as no longer to form part of those assets are considered supply of goods. Goods held or used for business are put to private use or are made available to a person for use any purpose other than business by or under directions of a person carrying on business. Okay. Is considered supply of services. Just a second, 2 minutes. Okay, let me read this again. Goods held or used for business are put to private use or are made available to any person for use for any purpose other than business by or under directions of person carrying on the business. Goods forming part of assets of any business carried on by a person who ceases to be a taxable person shall be deemed to be supplied by him in the course or furtherance of his business immediately before he ceases to be a taxable person. So this is again a supply of goods. Example, Arun, a trader, is winding up his business. Any goods left in stock shall be deemed to be supplied by him. Exceptions. Business is transferred as a going concern to another person. Business is carried on by a person or representative who is deemed to be a taxable person. 5. Renting of immovable property is a supply of services. Construction of complex building civil structure. Construction of a complex building civil structure, including a complex or building intended for sale to a buyer, wholly or partly, except where the entire consideration has been received after issuance of completion certificate where required by the competent authority or after its occupation, whichever is earlier, is a supply of services. Example, Rathi Builders has constructed individual residential units for agreed consideration of rupees 1.2 crore per unit. 90 lakh per unit were received before issuance of completion certificate by the competent authority and its first occupation and balance after completion. The term construction includes additions, alterations, replacements, or remodeling of any existing civil structure. The expression competent authority means the government or any other authority authorized to issue completion certificate under any law for the time being in force, and in case of non-requirement of such certificate from such authority from any of the following, namely an architect registered with the Council of Architecture constituted under the Architects Act 1972, a chartered engineer registered with the Institution of Engineers, a licensed surveyor. Temporary transfer or permitting use or enjoyment of intellectual property right. Development, design, programming, customization, adaptation, upgradation, enhancement, implementation of IT software. Agreeing to obligation to refrain from an act or to tolerate an act or situation or to do an act. Transfer of right to use any goods for any purpose, whether or not for specified period, for cash, deferred payment, or other variable consideration. These are all supply of services. Following composite supplies, works contract. Works contract means a contract for building, construction, fabrication, completion, erection, installation, fitting out, improvement, modification, repair, maintenance, renovation, alteration, and commissioning of any immovable property wherein transfer of property in goods is involved in the execution of such contract. Supply by way of or as part of any service or in any other manner whatsoever of goods, being food or any other article for human consumption or any drink, alcoholic liquor, where such supply or service is for cash, deferred payment, or other valuable consideration, is also a supply of services. CBIC has clarified the taxability of tenancy rights, joint venture, and priority sector lending certificates as under. Taxability of tenancy rights under GST. Pagari system, that is, transfer of tenancy rights against tenancy premium, is prevalent in some states. In Pagari system, the tenant acquires tenancy rights in property against payment of tenancy premium. The landlord may be the owner of the property, but the possession of the same lies with the tenant. The tenant pays periodic rent to the landlord as long as he occupies the property. The tenant also usually has the option to sell the tenancy right of the said property, and in such a case has to share a percentage of proceeds with the owner of the land as laid down in the tenancy agreement. Alternatively, the landlord pays to the tenant the prevailing tenancy premium to get the property vacated. It has been clarified that the activity of transfer of tenancy right against consideration is squarely covered under supply of service liable to GST. It is a form of lease or renting of property, and such activity is specifically declared to be a service in Para 2 of Schedule 2. As discussed in the table above, any lease, tenancy, easement, license to occupy land is a supply of services. Although stamp duty and registration charges have been levied on such transfer of tenancy rights, it shall still be subject to GST merely because the transaction involves execution of documents which may require registration and payment of registration fees, stamp duty would not preclude them from the scope of GST and from payment of GST. The transfer of tenancy rights cannot be treated as sale of land, building, in para 5 of schedule 3. Thus it is not a negative list activity, and consequently a consideration for the said activity shall attract levy of GST. To sum up, the activity of transfer of tenancy rights is squarely covered under the scope of supply and taxable per se. Transfer of tenancy rights to a new tenant against consideration in the form of tenancy premium is taxable. However, renting of residential dwelling for use as a residence to an unregistered person or to a registered sole proprietor taking the residential dwelling or rent on his own account in his personal capacity for use as his residence is exempt. Hence, grant of tenancy rights in a residential dwelling to use as residential dwelling against tenancy premium or periodic rent or both is exempt. As regards services provided by outgoing tenant by way of surrendering of tenancy rights against consideration in the form of portion of tenancy premium is liable to GST. Priority sector lending certificates. Priority sector lending certificates are in the nature of goods. Priority sector lending certificates are not securities. Priority sector lending certificates are akin to freely tradable duty scripts, renewable energy certificates, RDP license or replenishment license, which earlier attracted VAT. In GST, there is no exemption available to priority sector lending certificates, thus, PSLCs are taxable as goods. GST payable on these certificates would be available as ITC to the bank buying the certificates. Further, nature of supply of PSLC between banks is a supply of goods in the course of interstate trade or commerce. Accordingly, IGST shall be payable on the supply of PSLC traded over e-Kuber portal of RBI. Applicability of GST on liquidated damages, compensation, and penalty arising out of breach of contract or other provision of law. CBIC has clarified issues with respect to GST applicability on liquidated damages, compensation, and penalty arising out of breach of contract or other provisions of law. Clarification: agreeing to the obligation to refrain from any act or to tolerate an act or a situation or to do an act has been specifically declared to be a supply of service in para 5e of schedule 2 if the same constitutes a supply within the meaning of the CGST act. So, agreeing to the obligation to refrain from an act. Example: non compete agreements where one party agrees to not compete with the other in a product, service, or geographical area against a consideration paid by the other party. Example 53. A builder refraining from constructing more than a certain number of floors, even though permitted to do so by the municipal authorities against a compensation paid by the neighboring housing projects, which wants to protect its sunlight. An industrial unit refraining from manufacturing activity during certain hours against an agreed compensation on paid by a neighboring school which wants to avoid noise during those hours. Agreeing to the obligation to tolerate an act or an situation. This would include activities such as a shopkeeper allowing a hawker to operate from the common pavement in front of his shop against a monthly payment by the hawker, or an RWA tolerant agrees to install equipment for zero emission district at the behest of RWA of a neighboring residential complex against a consideration paid by such RWA, even though the emission discharge from the industrial was within permissible limits and there was no legal obligation upon the individual to do so. Above three activities must comply with the following conditions. These must be expressed or implied agreement or a contract must exist. Above three activities must be under an agreement or a contract. In other words, one of the parties to such agreement must be under a contractual obligation to either A. refrain, B. tolerate, or C. do. Such contractual agreement must be an independent agreement in its own right. Such agreement or agreement cannot take the form of an independent stand alone contract can take the form of an independent standalone contract or may form. Such contractual agreement must be an independent agreement in its own right. Thus, a person can be said to be making a supply by way of refraining from doing something or tolerating some act or situation to another person if the first person was under an obligation to do so and then perform accordingly. Such a contract cannot be imagined or presumed to exist just because there is a flow of money from one party to another. There must be an expressed or implied promise by the recipient of money to agree to do or abstain from doing something in return for the money paid to him. Two, consideration must flow in return to this contract or agreement. Some consideration must flow in return from the other party to this contract or agreement to the first party. Taxability of some of the transactions has been discussed in detail as under liquidated damages. It is common for the parties entering into a contract to specify in the contract itself the compensation that would be payable in the event of breach of contract. Liquidated damages has been defined as cash compensation agreed to by a signed written contract for breach of contract payable to the aggrieved party. The taxability or otherwise of liquidated damages is clarified as under. It is argued that the performance is the essence of a contract. Liquidated damages cannot be said to be the consideration received for tolerating the breach or non performance of contract. They are rather payments for not tolerating the breach of contract. Payment of liquidated damages is stipulated in a contract to ensure performance and to deter non performance, unsatisfactory performance, or delayed performance. Liquidated damages are a measure of loss and damage to the parties agree would arise due to the breach of contract. They do not act as a remedy for the breach of contract, they do not restitute the aggrieved person. A contract is entered into for execution and not for its breach. The liquidated damages or penalty are not the desired outcome of the contract. By accepting the liquidated damages, the party aggrieved by breach of contract cannot be said to have permitted or tolerated the deviation or non fulfillment of the promise by the other party where the amount paid as liquidated damages is an amount paid only to compensate for injury, loss, or damage suffered by the aggrieved party due to the breach of contract, and there is no agreement expressed or implied by the aggrieved party receiving the liquidated damages to refrain from or tolerate an act or to do anything for the party paying in the liquidated damages. In such cases, liquidated damages are a merely flow from money from the party who causes breach of contract to the party who suffers loss or damage due to such breach. Such payments do not constitute consideration for a supply and are not taxable. Examples of such supplies are damages resulting from damage to a property, negligence, piracy, unauthorized use, penalty stipulated in a contract for delayed consideration, construction of houses, forfeiture of earnest money by a seller in case of breach of an agreement to sell an immovable property, forfeiture of earnest money by the government or local authority in the event of a successful bidder failing to act after winning the bid for allotment of natural resources. The key in such cases is to consider whether the impugned, impugned payments constitute consideration for another independent contract, envisaging, tolerating, or an act or situation, or refraining from doing any act or situation, or simply doing an act. If the answer is yes, then it constitutes a supply irrespective of by what name it is called. Otherwise, it is not a supply. If the payment is merely an event in the course of the performance of the agreement and it does not represent the object as such of the contract, then it cannot be considered consideration. On the contrary, consider the following examples. A contract may provide that payment by the recipient of goods or services shall be made before a certain date, and failure to make payment by the due date shall attract late fee or penalty. A contract for transport of passengers may stipulate that the ticket amount shall be partly or wholly forfeited if the passenger does not show up. A contract for package tour may stipulate forfeiture of security deposit in the event of cancellation of tour by the customer. A contract for lease of movable or immovable property may stipulate that the lessee shall not terminate the lease before a certain period, and if it does so, will have to pay certain amount as early termination fee or penalty. Some banks similarly charge prepayment penalty if the borrower wishes to repay the loan before the maturity of the loan period. In the above examples, amounts paid for acceptance of late payment, early termination of lease or for prepayment of loan, or the amounts forfeited on cancellation of service by the customer as contemplated by the contract as part of the commercial terms agreed to by the parties constitute consideration for the supply of a facility, namely of acceptance of late payment, early termination of a lease agreement, of prepayment of loan, and of making arrangements for the intended supply by the tour operator respectively. Therefore, such payments, even though they may be referred to as fine or penalty, are actually payments that amount to consideration for supply and are subject to GST in cases where such supply is taxable. Since these supplies are ancillary to the principal supply for which the contract is signed, they shall be eligible to be assessed as the principal supply. Naturally, such payments will not be taxable if the principal supply is exempt. Check dishonor fine or penalty. The supplier wants payment to be received on time and does not want check to be dishonored. There is never an implied or express offer or willingness on part of the supplier that he would tolerate deposit of an invalid, fake, or unworthy instrument of payment against consideration in the form of check, dishonor, fine, or penalty. The fine or penalty that the supplier or a bank imposes for dishonor of a check is a penalty imposed not for tolerating the act or situation but a fine or penalty imposed for not tolerating, penalizing, and thereby deterring and discouraging such an act or situation. Therefore, check, dishonor, fine, or penalty is not a consideration for any service and not taxable. Penalty imposed for violation of laws. Penalty imposed for violation of laws such as traffic violations or for violation of pollution norms or other laws are also not considered for any supply received and are not taxable. Same is the case with fines. Penalties imposed by the mining department of a central or state government or local authority on discovering of mining of excess mineral beyond the permissible limit or of mining activities in violation of the permanent mining limit permit. Laws are not framed for tolerating their violation. They stipulate penalty not for tolerating violation but for not tolerating, penalizing, and deterring such violations. There is no agreement between the government and the violator specifying that violation would be allowed or permitted against payments of fine or penalty. There cannot be such an agreement as violation of law is never a lawful object or consideration. In short, fines and penalty chargeable by government or a local authority imposed for violation of a statute, bylaws, rules, or regulations are not leviable to tax. Forfeiture of salary or payment of bond amount in the event of the employee leaving the employment before the minimum agreed period. The provisions for forfeiture of salary or recovery of bond amount in the event of the employee leaving the employment before the minimum agreed period are incorporated in the employment contract to discourage non serious candidates from taking up employment. The said amounts are recovered by the employer not as a consideration for tolerating the act of such premature quitting of employment, but as penalties for dissuading the non serious employees from taking up employment and to discourage and deter such a situation. Further, the employee does not get anything in return from the employer against payment of such amounts. Therefore, such amounts recovered by the employer are not taxable as consideration for the service of agreeing to tolerate an act as or a situation. Late payment surcharge or fee. The facility of accepting late payments with interest or late payment fee, fine, or penalty is a facility granted by supplier naturally bundled with the main supply. It is not uncommon or unnatural for customers to sometimes miss the last date of payment of electricity, water, telecommunication services, etc. Almost all service providers across the world provide the facility of accepting late payments with a late fine or penalty. Even if this service is described as a service of tolerating the act of late payment, it is an ancillary supply naturally bundled and supplied in conjunction with the principal supply and therefore should be assessed as the principal supply. Since it is ancillary to and naturally bundled with the principal supply, it should be assessed at the same rate as the principal supply. However, the same cannot be said of check dishonor, fine, or penalty as discussed earlier. Fixed charges for power. The price charged for electricity by the power generating companies from the state electricity boards from individual or by state electricity boards from individual customers has two components, namely a minimum fixed charge and variable per unit charge. The fact that the minimum fixed charges remain the same whether electricity is consumed or not, or it is scheduled or consumed below the contracted or available capacity or a minimum threshold, does not mean the minimum fixed charge or part of it is a charge for tolerating the act of not scheduling or consuming the minimum, the contracted or available capacity or minimum threshold. Both the components of the price, the minimum fixed charges, capacity charges, and the variable energy charges, are charged for sale of electricity and are thus not taxable as electricity is exempt from GST. Cancellation charges. It is common business practice for suppliers of services such as hotel, accommodation, tours and travels, transportation, etc., to provide the facility of cancellation of the intended supplies within a certain time period on payment of cancellation fee. Cancellation fee can be considered as charges for the costs involved in making arrangements for the intended supply and the costs involved in cancellation of the supply, such as in cancellation of reserved tickets by the Indian Railways. Services such as transportation, travel, and tour constitute a bundle of services. The transportation service, for instance, starts with booking of the ticket for travel and lasts at least till the exit of the customers from the destination terminal. All services such as making available an online portal or convenient booking counters with basic facilities at the transportation terminal or in the city to reserve the seats and issue tickets for reserved seats much in advance of the travel, giving preferred seats with or without extra cost, lounge and waiting room facilities at airports, railway stations, and bus terminals, provision of basic necessities such as soap and other toiletries in the washrooms, clean drinking water, form part and parcel of transportation service. They constitute the various elements of passenger transportation service, a composite supply. The facilitation service of allowing cancellation against payment of cancellation charges is also a natural part of this bundle. It is invariably supplied by all suppliers of passenger transportation service as naturally bundled and in conjunction with the principal supply of transportation in the ordinary course of business. Therefore, facilitation supply of allowing cancellation of an independent supply against payment of cancellation fee or retention or forfeiture of a part or whole of consideration as security deposit in such cases should be assessed as the principal supply. Cancellation charges of railway tickets for a class would attract GST at the same rate as applicable to the class of travel. 5% on first class or air conditioned coach ticket and nil for other classes. Same is the case for air travel. Accordingly, the amount forfeited in the case of non-refundable ticket for air travel or security deposit or earnest money forfeited in case of customer failing to avail the travel, tour operator or hotel accommodation service or such other intended supplies should be assessed at the same rate as applicable to the service contract, say air transport or tour operator service or other such services. However, as discussed earlier, forfeiture of earnest money by a seller in case of breach of an agreement to sell an immovable property by the buyer or such forfeiture by government or local authority in the event of successful bidder failing to act after winning the bid, is a mere flow of money as the buyer or the successful bidder does not get anything in return for such forfeiture of honest money. Forfeiture of honest money is stipulated in such cases not as a consideration for tolerating the breach of contract, but as a compensation for the losses suffered and as a penalty for discouraging the non-serious buyers or bidders. Such payments, being merely flow of money, are not a consideration for any supply and not taxable. Clarification regarding applicability of GST on penal charges being levied by the regulated entities REs. Regulated entities, hereinafter referred as REs, such as banks or NBFCs, have been instructed via RBI to discontinue the use of penal interest for non compliance with loan terms. As per the instructions, instead of penal interest, REs are to levy penal charges for non compliance with loan terms. The intent of levying penal charges is essentially to inculcate a sense of credit discipline. These instructions are effective from 1st of January 2024 and do not apply to credit cards, external commercial borrowings, trade credits, and structured obligations which are covered under product specific directions. Issue. The issue which arose for consideration was whether penal charges are levied are in the nature of payment or consideration for tolerating an act or situation. As clarified via Circular 17810 dated 2022, discussed above, the certain payments such as liquidated damages for breach of contract are not a consideration for tolerating an act or situation. They are rather amounts recovered to deter such acts. Such amounts are for preventing breach of contract or non-performance and thus mere events in a contract. The essence of a contract is its performance and not its breach, meaning thereby that parties enter into a contract for execution and not for its breach. Penal charges levied by REs in compliance with RBI directions are essentially the nature of charges for breach of terms of contract, and hence it has been clarified that no GST is payable on the penal charges levied by the regulated entities in compliance with RBI direction for non-compliance with material terms and conditions of a loan contract by the borrower. Applicability of GST in respect of warranty replacement of goods or its part and repair service during warranty period. Okay, before doing that, we'll take a 10-minute break. Applicability of GST in respect of warranty replacement of goods or its parts and repair services during warranty period. As a commercial practice, the original equipment manufacturers or suppliers offer warranty for the goods or services supplied by them to the customers. During the warranty period, goods or services are replaced to the customers by the manufacturer itself or by the distributor on behalf of the manufacturer, and generally no separate consideration is charged and received at the time of replacement from the customer. Now, following issues have been clarified in respect of warranty replacement of goods or its parts and repair services provided during the warranty period. Scenario 1: original equipment manufacturer offering replacement of goods or its parts, repair services under warranty to the customer. So the OEM replaces goods or provides repair services to the customer. Issue: where the OEM offers warranty for the goods supplied by him to the customer and provides replacement of goods or its parts or repair services to the customer during the warranty period without separately charging any consideration at the time of such replacement or repair services, whether GST would be payable on such replacement of goods or its parts or supply of repair services without any consideration from the customer as part of warranty. Clarification: the value of original supply of goods by the manufacturer to the customer includes the likely cost of replacement of goods or its parts and or repair services to be incurred during the warranty period, on which tax would be already have been paid at the time of original supply of goods. In as such, where the manufacturer provides replacement of parts and or repair services to the customer during the warranty period without separately charging any consideration at the time of such replacement or repair services, no further GST is chargeable on such replacement of goods or its parts and or repairing service during warranty period. So no separate charges for such replacement or repair services, no further GST is payable. However, if any additional consideration is charged by the manufacturer from the customer either for replacement of goods or its parts or for any service, then GST will be payable on such supply with respect to such additional consideration. Additional consideration charged for such replacement or repair services, GST will be payable. Scenario 2: distributor provides warranty replacement and or repair services to the customer on behalf of the manufacturer. So the distributor replaces goods or provides repair services. Issue 1: where GST would be payable on replacement of goods or its parts and or repair services provided by a distributor without any consideration from the customer as part of a warranty on behalf of the manufacturer. Clarification: there may be instances where a distributor of a company provides replacement of goods or its parts and or repair services to the customer as part of warranty on behalf of the manufacturer, and no separate consideration is charged by such distributor in respect of the said replacement or repair services from the customer. In such cases, as no consideration is being charged by the distributor from the customer, no GST would be payable by the distributor on the said activity of providing replacement of goods or its parts or repair services to the customer. However, if any additional consideration is charged by the distributor from the customer, either for replacement of goods or its parts for any service, then GST will be payable on such supply with respect to such additional consideration. Additional consideration charged for such replacement or repair services. Taxability of the transaction activity undertaken between distributor and manufacturer. Issue 2: where any supply is involved between the distributor and the manufacturer in case of replacement of goods or its parts by distributor. There can be four instances as discussed at the next page. In case where the distributor replaces the goods or its parts to the customer under warranty either by using his stock or by purchasing from a third party, and charges the consideration for the parts so replaced from the manufacturer by issuance of tax invoice for the said supply made by him to the manufacturer, GST would be payable by the distributor on the said supply by him to the manufacturer. Distributor, let's say another case, Distributor raises a requisition to the manufacturer for the goods or its parts to be replaced by him under warranty, and the manufacturer then provides the said goods or its parts to the distributor for the purpose of such replacement to the customer as part of warranty without separately charging any consideration at the time of such replacement. No GST is payable on such replacement of goods or its parts by the manufacturer. Distributor replaces the goods or its parts to the customer under warranty out of the supply already received by him from the manufacturer, and the manufacturer issues a credit note in respect of the goods or its parts, so subject to the provisions of section 34(2). Accordingly, the tax liability may be adjusted by the manufacturer subject to the conditions that such distributor has reversed the ITC availed against such goods or parts. Distributor replaces the goods or its parts to the customer under warranty by using a stock and then raises a requisition to the manufacturer for the goods or the parts. The manufacturer then provides the said goods or the parts to the distributor through a delivery challan without separately charging any consideration at the time of such replenishment. No GST is payable in such a case. Issue 3, where the distributor provides repair services in addition to replacement of parts or otherwise to the customer without any consideration as part of the warranty on behalf of the manufacturer, but charges the manufacturer for such repair services either by way of issue of tax invoice or debit note, whether GST will be payable on such activity by the distributor. Clarification: in such scenario, there is a supply of service by the distributor, and the manufacturer is the recipient of such supply of repair services in accordance with provisions of Section 293A of the CGST Act. Hence, GST would be payable on such provisions of services by the distributor to the manufacturer. Service in addition to replacement of parts to the customer without any consideration as part of the warranty and charges the manufacturer for such repair service. Scenario 3, extended warranty. Sometimes companies provide offers of extended warranties to the customer which can be availed at the time of original supply or just of the standard warranty period. Whether GST would be payable in both the cases. Clarification: if a customer enters into an agreement of extended warranty with the supplier of the goods at the time of original supply, then the consideration for such extended warranty becomes part of the value of the composite supply, the principal supply being the supply of goods, and GST would be paid accordingly. However, if the supply of extended warranty is made by a person different from the supplier of the goods, and then supply of extended warranty will be treated as a separate supply from the original supply of goods and will be taxable as supply of services. In case where a consumer enters into an agreement of extended warranty at any time after the original supply, then the same shall be treated as a supply of services distinct from the original supply of the goods, and the supplier of the said extended warranty shall be liable to discharge GST liability applicable on supply of services. Applicability of GST on location charges or preferential location charges (PLC) collected along with consideration for sale or transfer of residential or commercial properties. Allowing choice of location of the apartment is integral part of supply of construction services. Therefore, PLC is part of consideration charged for supply of construction services before issuance of completion certificate. Therefore, PLC paid along with the consideration for the construction services of residential, commercial, industrial complex forms part of composite supply, where supply of construction services is the main service and PLC is naturally bundled with it and are eligible for the same tax treatment as the main supply of construction service. So with this, our schedule 2 is also done, and now we go into schedule 3, which is the non-supplies under GST. So we completed schedule 2 read with section 7(1)(a). So non-supplies under GST. Activities or transactions specified under schedule 3 section 7(2)(a) provides activities or transactions specified in what? Sorry. In schedule 3 shall be treated neither as supply of goods nor a supply of services. Schedule 3 specifies transactions or activities which shall neither be treated as supply of goods nor as supply of service. Thus, the activities or transactions specified under this schedule can be termed as non-supplies under the GST regime. In a way, it is a negative list for the purpose of taxation in GST. It is important to note that apart from the activities specified in Schedule 3, some activities have been notified by the government via different notifications which are also to be considered as non-supplies. Further, some circulars have been issued clarifying the certain transactions are to be considered as non-supplies. Hence, our discussions under this heading will revolve around the following: non-supplies listed in Schedule 3, non-supplies notified via notification, and non-supplies clarified by way of circulars. So first we start with non-supplies listed in Schedule 3. Para 1. Service by an employee to the employer in the ordinary course, in the course of or in the relation to his employment. The service provided by casual worker to employer who gives wages on daily basis to the worker are services provided by the worker in course of employment. Casual workers employed by a construction contractor for execution of a building contract for him are services in the course of employment. Similarly, casual workers employed by a security services agency for provision of security services to a client are also services in the course of employment. Only services that are provided by the employee to the employer in the course of employment are outside the realm of supply. However, services provided outside the ambit of employment for a consideration would qualify as supply. Annapurna is a director of Nilgiri receiving remuneration, which is declared as salaries in the books of the company and subject to TDS under section 192. In this case, services provided by Annapurna to Nilgiri are in the course of her employment with the company. Services provided on contract basis by a person to another, principal to principal basis, are not services provided in the course of employment. Any amount paid by employer to employee for not joining a competing business is paid for providing the service of forbearance to act and cannot be considered for providing services in the course of employment. Annapurna, an independent director of Nilgiri Limited, receives a sitting fee of 12,000. Since, as per the Companies Act 2013, independent director should not have been an employee of the company. Services provided by Annapurna to Nilgiri are not in the course of employment. Services by any court or tribunal established under any law for the time being in force. So, leviability of GST on amounts or fees charged by Consumer Disputes Redressal Commission. In order to provide inexpensive, speedy, and summary redressal of consumer disputes, quasi judicial bodies are set up in each district and state and at the national level called the district forums, the state consumer disputes redressal commissions, and the national consumer disputes redressal commissions, respectively. Consumer disputes redressal commissions, national, state, or district, may not be tribunals literally, as they may not have been set up directly under Article 323B of the Constitution. However, they are clothed with the characteristics of a tribunal. Consequently, fees paid by litigants while registering complaints to said commissions are not leviable to GST. Any penalty in cash imposed by or amount paid to these commissions will also not attract GST. Functions performed by MPs, MLAs, member of panchayats, member of municipalities, member of other local authorities, duties performed by any person who holds any post in the pursuance of the provisions of the constitution in the capacity, duties performed by any person as a chairperson or a member or a director in a body established by the central government or state government or local authority who is not deemed as an employee before the commencement of this clause. Duties performed by the example duties performed by the President of India, Vice President, Prime Minister, Chief Justice, Speaker of Lok Sabha, Chief Election Commissioner, CNAG, Chairman of Union Public Service Commission, Attorney General of India in that capacity. So, service of funeral, burial, crematorium, and mortuary, including transportation of deceased. Supply of land and subject to paragraph or schedule to sale of building. That is in case where the entire consideration for the sale of building received after issuance of completion certificate or after its first occupation, whichever is earlier. Land may be sold either as it is or after some development such as leveling, laying down of drainage lines, water lines, electricity lines, etc. It is clarified that sale of such developed lands is also sale of land and is covered under this para and accordingly does not attract GST. However, it may be noted that any service provided for development land like leveling, laying of drainage lines shall attract GST at applicable rates for such services. Actionable claims other than specified actionable claims. Actionable claims are specifically included in the definition of goods under Section 252. However, this para of Schedule 3 specifically excludes actionable claims other than specified actionable claims from the ambit of definition of supply. Co-joint reading of said provisions implies that only specified actionable claims are treated as supply. All other actionable claims are outside the ambit of definition of supply. Now the question arises, what are these specified actionable claims? It means that the actionable claims involved in or by way of betting, casinos, gambling, horse racing, lottery, or online money gaming. Online money gaming means online gaming in which players pay or deposit money or money's worth, including virtual digital assets, in the expectation of winning money or money's worth, including virtual digital assets. In any event, including game, scheme, competition, or any other activity or process, whether or not its outcome or performance is based on skill, chance, or both, and whether the same is permissible or otherwise under any other law for the time being in force. Online gaming means offering of a game on the internet or an electronic network and includes online money gaming. Some of the other of examples of actionable claims are right to recover insurance money, claim for arrears of rents, claim for future rents, unsecured loans, unsecured debentures, bills of exchange, promissory notes, bank guarantee, fixed deposit receipt, right or to benefit of the contract. These are not considered as supply of goods or services. Merchant trading. Supply of goods from a place in the non-taxable territory to another place in the non-taxable territory without such goods entering into India is not a supply of goods or a supply of services. In bond sales, supply of warehouse goods to any persons before clearance for home consumption. This is also neither supply of goods, neither supply of services. Radhesham imported some goods in India but kept the goods in custom bonded warehouse without clearing it for home consumption. In the meantime, Radhesham sold these goods to Sitaram while they were in warehouse. This transaction between Radhesham and Sitaram is neither supply of goods nor supply of services. High sea sales. Supply of goods by the consigning to any other person by endorsement of documents of title to the goods after the goods have been dispatched from the port of origin located outside India but before clearance from home consumption. Prasun of India imported goods from Japan. While the goods were in high seas, Prasun sold the goods to Jinesh in India by way of endorsement of documents of title of goods. This transaction between Prasun and Jinesh is neither supply of goods nor supply of services. Activity of apportionment of co-insurance premium by the lead insurer to the co-insurer for the insurance services jointly supplied by the lead insurer and the co-insurer to the insured in the co-insurance agreements, subject to the condition that the lead insurer pays the central tax, the state tax, or integrated tax, and the integrated tax of the entire amount of premium paid by the insured. So, co-insurance is a practice where multiple insurance companies jointly cover a single insurance policy. Instead of a single insurer bearing the entire risk, the risk is shared between two or more insurers called co-insurers. In a co-insurance agreement, each insurer agrees to cover a specific percentage of the risk and in return receives a corresponding percentage of the total premium. One of the co-insurers is designated as a lead insurer. The lead insurer is responsible for managing the policy, handling the administration, such as claim processing, and communicating with the insured. The lead insurer collects the total premium from the insured and then apportions the premium between the co-insurers, known as co-insurance premium, based on their respective shares of the risk, along with paying applicable taxes. Services by insurer to the reinsurer for which ceding commission or the reinsurance commissions is deducted from reinsurance premium paid by the insurer to the reinsurer, subject to the condition that the tax was paid by the reinsurer on the gross premium payable by the insurer, inclusive of the said ceding commissions or the reinsurance commission. Reinsurance is a risk management practice where an insurance company called the insurer transfer part of its risk to another insurance company in exchange for a portion of the premium that insurer collects from its policyholders called reinsurance premium. This allows the insurer to manage its risk and financial exposure. The reinsurer often pays ceding commission, also known as reinsurance commission, to the insurer to compensate for administrative costs, underwriting, and acquisition expenses related to issuing and servicing the policy. By receiving this commission, the insurer is compensated for expenses and reduces its overall burden, making reinsurance financially viable. Generally, while paying the reinsurance premium, insurer deducts the ceding commission or reinsurance commission payable by reinsurer. ESOP, ESPP, RSU provided by a company to its employees through its overseas holding company. So, some of the Indian companies provide the option to their employees for allotment of securities of shares of their foreign holding company as part of the compensation package as per terms of the contract of employment. In such cases, and exercising the option by the employees of Indian subsidiary company, the securities shares of foreign holding company are allotted directly by the holding company to the concerned employees of Indian subsidiary company, and the cost of such securities shares is generally reimbursed by the subsidiary company to the holding company. In case where securities shares or securities in case where security shares of the foreign holding company are transferred to the employees of domestic subsidiary company as employee stock purchase plan or employee stock option plan or restricted stock unit, GST is not leviable on the compensation paid to the employee by the employer as per the terms of employment contract, since as seen earlier. The purchase or sale of securities or shares in itself is neither a supply of goods nor a supply of services. Moreover, the ESOP, ESPP, RSU is a part of remuneration of the employee by the employer as per terms of employment and is covered under Para 1 of Schedule 3 of the CGST Act. When reimbursement for transfer of securities or shares is done by domestic company to a foreign holding company on cost to cost basis, the same cannot be treated as import of services by the domestic subsidiary company from the foreign holding company and hence is not liable to GST. If the foreign holding company charges any additional fee, markup, or commission from the domestic company for issuing ESOP, the same shall be considered to be in the nature of consideration for the supply of services of facilitating or arranging the transaction in securities or shares by the foreign holding company to the domestic subsidiary company. The GST shall be payable by the domestic holding company on reverse charge basis on such import of services from the foreign holding company. Non-supply is notified via notification. Government is empowered to notify the activities or transactions undertaken by the central government or state government or any local authority in which they are engaged as public authorities as the activities or transactions which shall be treated neither as supply of goods nor as supply of services. Activity in relation to panchayat or municipality functions. Services by way of any activity in relation to a function entrusted to a panchayat or to a municipality under are neither treated as supply of goods or not as a supply of services. Grant of alcoholic liquor license. Services by way of grant of alcoholic liquor license by the state governments are treated neither as supply of goods nor as a supply of service. Such license is granted against consideration in the form of license fee or application fee or by whatever name it is called. The special dispensation is applicable only to supply of service by way of grant of legal license by the state government as an agreement between the center and the states. Hence, this is not applicable or slash has no precedence value in relation to grant of other licenses and privileges for a fee in other situations where GST is payable. It may be noted that services provided by the government to business entities, including by way of grant of privileges, license, mining rights, natural resources such as spectrum, etc., against payment of consideration in the form of fee, royalty, etc., are taxable under GST. Tax is required to be paid by the business entities on such services under reverse charge. Non-supply is clarified by way of circular. Interstate movement of various modes of conveyance. Interstate movement of various modes of conveyance between distinct persons, including trains, buses, trucks, tankers, trailers, vessels, containers, aircrafts, carrying goods or passengers or both, for repair and maintenance, except in cases where such movement is of further supply of the same conveyance, shall be treated neither as supply of goods nor as supply of services, therefore not leviable to IGST. However, applicable CESI GST on the case may be shall be leviable on repairs and maintenance done for such conveyance. Interstate movement of rigs, tools, spares, and all other goods on wheels like cranes. Above circular shall mutandis apply to interstate movement of rigs, tools, and spares, and all goods on wheels where movement of such goods is for further supply of the same. Such interstate movement shall be treated neither as supply of goods nor as shall be treated neither as supply nor as supply of service, and consequently no IGST would be applicable on such movements. In this context, it is also reiterated that applicable as the case may be is leviable on repairs and maintenance done for such goods. Just a second. So again, in this context, it is also reiterated that applicable as the case may be is leviable on repairs or maintenance done for such goods. In the preceding paras, we have discussed how to determine whether a given activity or transaction constitutes a supply. Once an activity or transaction qualifies as supply, one needs to determine whether the same is leviable to GST or not. Though the provisions relating to levy and collection of GST have been discussed at length in Chapter 2, Charge of GST, in this module of the study material, a brief idea of the same is provided here under. Clarification regarding Clarification regarding transaction and vouchers. Voucher means an instrument where there is an obligation to accept it as consideration or part consideration for a supply of goods or services or both, and where the goods or services are both to be supplied or the identities of their potential suppliers are either indicated on the instrument itself or in related documentation, including the terms and conditions of use of such instrument. From this definition of voucher, it emerges that voucher may be in the nature of payment instrument which creates an obligation on the supplier to accept it as a consideration or part consideration for the supply of goods and or services. The issuance of payment instruments, including prepaid instruments in India, is regulated by Reserve Bank of India in terms of the Payment and Settlement Act 2007. RBI's master direction and the relevant notification or circulars or communications issued by the RBI from time to time. Prepaid instruments as defined by RBI. Payment instruments that facilitate purchase of goods or services against the value stored on such instrument. The value stored on such instruments represents the value paid for by the holder by cash, by debit to a bank account, or by credit card. The prepaid instruments can be issued as cards, wallets, and in such form or instruments which can be used to access the PPI and to use the amount therein. Further, as per Section 275 of the CGST Act, money includes an instrument recognized by the Reserve Bank of India, which is used as a consideration to settle an obligation. On combined reading of the definition of voucher as per Section 2118, along with the definition of money as per Section 275, and the description of the prepaid instruments given by RBI, following is observed where the voucher is covered as prepaid instrument recognized by the RBI and is used as consideration to settle an obligation. In such cases, the voucher will fall under the definition of money. Thus, as money is we consider neither as supply of goods nor as supply. Where voucher is not covered as a prepaid instrument recognized, in such cases, voucher cannot be treated as money. The voucher will be in the nature of an obligation in the supplier to receive it as as vouchers are not covered under definition of specified action number claim, it appears that they are covered in entry 6 of Schedule 3. Therefore, it appears that even in such a case, transaction and vouchers would be treated neither as supply of goods nor as supply of services. Issue 1. Whether transactions or vouchers falls under the category of supply of goods or services. It has been clarified that irrespective of whether voucher is covered as a prepaid instrument recognized by RBI or not, the voucher is just an instrument which creates an obligation on the supplier to accept it as consideration or part consideration, and the transactions in voucher themselves cannot be considered either as a supply of goods or as a supply of services. However, supply of underlying goods or services for which vouchers are used as consideration or part consideration may be taxable under GST. Issue 2. What would be the GST treatment of transaction in vouchers by distributor or sub-distributor, agents, etc.? Clarification. There are primarily two models for distribution of vouchers to distributors, sub-distributors, agents, etc. Where vouchers are distributed, in such cases, the distributor dealer purchases voucher from the voucher issuer, typically at a rate, and subsequently sells the same to the same sub distributors, corporates, or end consumers, and generates revenue through a trading margin, which is the difference between acquisition cost and selling price of the vouchers by the said distributor or dealer. In such cases, distributor dealers, including sub-distributors, own the vouchers and operate autonomously with full control over the process from purchase to the final sale of vouchers to the end user. As per Section 9(1) of CGST Act, GST is chargeable on the supply of goods or services, as the transaction in vouchers is neither supply of goods nor supply of services. Therefore, pure trading of vouchers in this case would not constitute either supply of goods or supply of services. Accordingly, such trading of vouchers would not be leviable to GST as per Section 9(1). Where vouchers are distributed using distributors or sub-distributors, agents on commission/fee basis, in such cases, the transactions between the voucher issuer and these distributors or sub-distributor agents are on principal agency basis. These arrangements, as per contract or agreement between the distributors or distributor agents and the voucher issue issuer, may specify a set of obligations of such agents, such as marketing and promotion and other related support activities against a commission or fee or any other amount by for such purpose. In such cases, distributors, sub-distributors, agents do not operate autonomously, do not own the vouchers, and only act as agents of the voucher issuer. In such cases, GST would be payable by such distributor or sub-distributor agent acting as an agent of the voucher issuer on the commission fee or any other amount by whatever name called for such purpose as a supply of services to the voucher issuer. Issue 3. What would be the GST treatment of additional services such as advertisement, contraband, etc.? Clarification. In such a case, the said service fee, service charge, affiliate charge to or other amount for supply of such additional services to the voucher issuer as per the terms of the contract or agreement would be liable to GST at the applicable rate. Okay. The thing is that we'll do this supply leviable to GST. For a supply to attract GST, primarily two additional conditions need to be satisfied. Supply must be made by a taxable person, and supply must be a taxable supply. These two additional conditions have been discussed here under. Supply by a taxable person. A supply to attract GST must be made by a taxable person. A supply attracting GST can be made to a non-taxable person also. The restriction of being taxable person is only on the supplier, whereas the recipient can be taxable or non-taxable. Taxable supply. For a supply to attract GST, the supply must be taxable. Taxable supply has been broadly defined and means any supply of goods or services or both, which is leviable tax under GST law. On the other hand, exempt supply means supply of any goods or services which or both which attract either nil rate of tax or wholly exempt from tax and includes a non-taxable supply. So based on this, the whole chapter is more or less completed. We only have the section 8 part, that is composite and mixed supplies. These are 7 or 8 pages, yeah, around 10 pages, and we have 4 or 5 pages left of the voucher instrument. So both of these we will take up when we do the first revision of this chapter, where we also will make notes, where we'll also clarify all the doubts, and uh, we'll complete our first revision. So the first time reading of this chapter, I will consider it is done, except these 5 plus 10, 15 pages. which we will take up in the first revision directly, and we'll complete it then and there. Comes to an end.